Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Kevin Davitt, Head of Index Options Content at Nasdaq, for a review on the performance of index options for 2022 and what investors need to know about the Nasdaq-100 index heading into 2023. Kevin, it is great to see you as always. Welcome back to Trade Talks.
Thanks for having me, Jill. Good to see you too.
And as we come into the year end here, what does the landscape look like for index options?
So it has obviously been a challenging year for most equity and fixed income investors. There have been very few bright spots from an outright price performance standpoint. So I want to be clear and not marginalize the drawdowns that market participants have endured. But I do believe that there's a correlation with the significant growth we've seen in the index option market this year. So the visual on the screen plots annual non-equity option volumes cleared at the OCC. So in essence, what you're looking at are index options volume by year. And it's important to note that the 2022 data is only through the end of November. So the industry's on target to clear more than 700 million index options this year. And that's last year, slightly more than 500 million index options cleared. So we are talking about 40% year over year growth, which is really exciting. I think that growth speaks to a far greater understanding of options generally, as well as the unique utility that people associate with index products. And I'm referencing the hedging perspective there, which has picked up a great deal this year. Thinking about that overall volume mix, it shifted away from individual equities and toward index and ETF products in 2022. From my standpoint, that's a reflection on the market as a whole. So we are in the middle of a shifting macro narrative, which has been obviously driven by interest rates, and the significant change in the relative cost of money continues to kind of have ripple effects across all asset classes. And index options arguably enable end users to express a view or, like this year, hedge off macro risk with a single product like the Nasdaq-100 index options. And then there's a variety of different notional products that track the index. And I would not be surprised to see that trend continue as we move into next year.
Yeah, the growth, Kevin, is absolutely remarkable. Let's talk about changes that investors need to be aware of for the Nasdaq-100 index as we go into 2023, because as the global and U.S. markets evolve, so does the index.
Yeah, that's a really good way to put it. So kind of dovetailing on that, indexes like the Nasdaq-100 are not static. Their constituency changes annually. And for the Nasdaq-100, those changes went into effect following last Friday's quarterly expiration. So essentially, as of this Monday, as many of your listeners know, the Nasdaq-100 is made up of the top 100 non-financial stocks listed on Nasdaq exchanges. The key there is that it's systematic and it's market cap driven. So you should be able to see the additions and deletions in that reconstitution on your screen. There's going to be 7 companies removed from the calculation. They include Baidu, Match, Splunk, and a handful of others. 6 will be added in their place. You see them: CoStar, Rivian, Warner Brothers Discovery, Global Foundries, Baker Hughes, and Diamondback. Now, those changes impact all the products designed to track the benchmark, including the ETFs like the Qs, the futures at Chicago Mercantile Exchange, as well as our index options. And if listeners have any questions, they can most certainly reach out to the index team at Nasdaq and we can address those.
Yeah, it was interesting to see the 6 companies coming in, the mix of sectors that are being added to the index. So Kevin, speaking of your team, what is the Nasdaq index team focused on going to 2023?
Well, thank you for the question. Our group is going to continue to advocate for the informed use of index options, and particularly Nasdaq-100 index options. So again, from my perspective, more and more portfolios resemble the makeup of the Nasdaq-100. As you mentioned, the US and the global economy, kind of just by way of example, continues to transition from fossil fuels toward clean energy. Just one example. As a result, we're going to work to position our products alongside other index alternatives as ideal tools for gaining exposure and managing that portfolio risk. We're going to do that with the help of our index team at NASDAQ, as well as with partnerships with other really well-known firms like Invesco, like Global X, JP Morgan. There's also going to be a concerted effort to support the growth that we've seen in our smaller notional products like XND. I've mentioned it on Trade Talks before, but XND is an index options product that's 1/100th the size of the full NASDAQ 100. And from our perspective, we're seeing increased adoption on the part of individuals and institutions, and particularly from asset managers that are looking to allocate to smaller, separately managed accounts. So XND options currently offer about 11,000 worth of exposure to the index, which is from a notional standpoint, and that's suitable for a wide range of accounts. And they come with the benefits typically associated with index products. So thank you for the opportunity. I'm excited about what's in store. I appreciate your having me on, and you probably heard it a lot this week, but happy holidays to you and your viewers.
Yes, and happy holidays to you and your team. Kevin, appreciate the insight. As always, we look forward to seeing you in 2023. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.